Well, we're getting ready to learn the ABCs of RMDs, which stands for Required Minimum Distribution. That's a financial term that our financial expert, Dr. Nancy Anderson, who joins us now, is getting ready to explain. Dr. Anderson,
Hi.
It's good to see you.
And once again, we're talking about something that just you're too young for.
But eventually, I will need to know.
Eventually. So this is called a required minimum distribution, and it only applies to retirement accounts. And so those contributions that you make to your retirement accounts, you don't pay tax on them, and the earnings, you don't pay tax on them. But that's not forever, because Uncle Sam wants to make sure he gets his money. So if you have a 401k, a 403b, a traditional IRA, a SIMPLE IRA, a SEP IRA, then you're going to have to do this calculation. But this does not apply to Roth IRAs. So if you're already retired, you have to look at that. And the number you have to take out, the dollar amount, changes every year. First, know that you must start doing this when you reach the age of 70 and a half. Jewel, you're a long way off from that. That very first year, you can delay until April 1st of the next year taking out that money. But doing that could mean that you're doubling up on the tax bill. After the first year, you have to take that money out by the end of the next year. Now, most providers, banks, brokerage houses, mutual funds will do the calculation for you, but this is how it works. You look at the value of your retirement account on the end of the year from the previous year, 12/31, and then you look up your age in the life expectancy tables. IRS.gov has those tables. There are 3 different tables. Most will use the uniform table, and that age that you are corresponds to a divisor. So you divide the previous year in value by the divisor, and that tells you how much you have to take out for the next year. That is your RMD, your required minimum distribution. Now, the amount that you take out, that's what you're going to have to pay tax on. So most people only take out what they have to take out, the RMD. Now, you may have more than one retirement account. And the Uncle Sam doesn't care where you take the money out. You can calculate this based on the total of all the accounts, or you can take it out of just one, each of those RMDs. It doesn't matter. They just want to make sure that eventually we take the money out and we pay our taxes.
Absolutely. And so the RMD, this is something that for folks who may not be as financially savvy as yourself, an accountant can obviously help them figure it out.
Well, wherever they have that retirement account, that institution should help them, and they can call and ask those questions. We are calculating those numbers for this year based on the year in last year in my office right now.
All right. Well, Dr. Anderson, as always, thank you very much for your financial expertise. We appreciate you being here on Midday. Well, next at Midday, coming up, Rock the Runway is taking place in downtown